So what do you think the impact more broadly of inflation has been so far on tech?
Well, when we went and looked back at the 70s during the stagflation period, the best performing sector was actually consumer products, and the worst performing was information technology. And I think that's a testament to how mission critical a lot of the software and computers were back then for businesses. It's much more mission critical today, and so we expect actually tech to perform a lot better, where it's gonna show up in the form of pain or equity prices declining, or those software programs that businesses use as on an ancillary basis for things that are just not core to the business. So we do expect inflation to affect technology pretty dramatically. And in growth stocks, we've already seen it as they're down 60 to 70% pretty much across the board. And we're seeing it in the private markets as well.
So by dramatically, what do you expect the impacts of that will be? Massive down rounds, inability to fundraise, more layoffs?
Yeah, okay. So you hit on all the key factors. We saw this before the dot-com bust. There's a very strong anchoring bias in the private markets for the last 12 years, and even through the great financial crisis, growth stocks really never went down. And so it's going to take time for prices to adjust. We're seeing the early cracks, some of which come in the form of less competition. We're also seeing converts. And what converts do is maintain an equity price, but allow a company to extend its runway. What follows converts is always down rounds. The other thing that's coming, and we saw this today with Carvana or layoffs, we think in technology, the layoffs are actually going to be shocking. They're going to be shocking, Emily. And we've seen Meta and Facebook freeze hiring, the same with Uber. And this will be in the millions of people in the next 12 to 24 months. This is just the beginning.
So you're comparing it to the dot-com bust. I mean, just how close a comparison is there? I mean, do you think this could take 12 years to play out?
So unclear how long it will take. Our current view is that over the next 12 months, it's going to be very rocky. Back half of next year, things should firm up in the tech sector. The dot-com bust, look, that was unique to that time period. Our time period, more liquidity, company business models are a little bit stronger. There's a better understanding of how to get the cash flow and profitability at the management team level, at the board level, and those discussions are happening right now. So I suspect that the downturn will be a little bit more violent, but the recovery will be faster. And in the next kind of 12 to 24 months, you're going to see some really interesting opportunities. But we've got to flush through these down rounds, and companies with 6 to 12 months of capital left are really going to struggle to raise money in this environment.
So who makes it out of the gauntlet? Who doesn't?
So those with fortified balance sheets, those companies that got ahead of fortifying the balance sheet by trimming staff when necessary. It's always unfortunate to do layoffs, but it's part of what needs to happen during a downturn. And where you're going to see the most pain is on the larger businesses, the unicorns. The smaller companies that can adapt and extend runway 3 or more years should be okay. Those that have less than 2 years are going to struggle. More broadly, what's going to work? Commerce infrastructure, anything to do with e-commerce, fintech, although we're seeing competition increase, and it's been a bloodbath both in the private and the public markets, and then transportation, logistics, and security.